Good morning, one and all, and welcome to this morning's video. So, this morning I have three pairs on watch, and those are Euro dollar, pound dollar, and Kiwi CAD. So, I would say my favorite of the bunch is Euro dollar, and if you watched my previous videos, you will already know why I am looking at this pair. I'm looking at this pair because we just take the paintbrush tool, we have all of this consolidation here, and the start of all of this, okay? So we broke out of all of this, and the start of all of this, the footprint that was left after we broke out of all of this volume was here, okay? So this is the origin of this move here. What happens? I said in a previous video that we would likely break below it and then start moving to the upside. And if you look, we have that repeatable psychological behavior that we see in the markets time and time again. We have this low, okay, which near misses to the base, to this area of value. We then have this low here, which wicks to it, but not through it. A lot of the time, these higher time frame liquidity points, even if they're not necessarily that standout, if they happen to be a higher time frame liquidity point, which is the origin of a move, then we will likely break below if we're going to move to the upside. Okay, and then we come back down, wick, we take out this wick here, and then we start moving to the upside. I like the fact that we have this inverse, this morning star formation rather. So we have the bearish candle, we wick below, and then we had yesterday's daily close, which closed above. Okay, now this doesn't necessarily mean that we are coming all the way up to here to take out this high, which this high near missed too. But even in the short term, we can capitalize on a move to the upside, okay, to potentially take out, even if we only moved up to here, to this high, which this high near missed too, there's still profit potential to be made there. And that's why, partly why my target arrow is pointed there. We could be moving higher. Perhaps we're doing something like that. Okay, creating that kind of structure. We don't need to know what is going to happen next to make money. All we need to be able to do is manage risk. So as I drill down a little bit, you can see that we had yesterday, we've had 4 hour momentum, 4 hour follow through, we've had the impulse correction continuation. This was a bit tricky. There wasn't actually an entry that I could get involved in here. Okay, a bit of a strange looking flag anyway. Okay, and I would have had to have a very wide stop loss. Okay, I'm not really interested in stop losses like that if I was going to take it on the break. And if I was looking for the entry down here, I did have this on watch. There was no entry candle to actually get involved. Okay, so I'm looking at rejection candles. There's nothing that I could have got involved in there. No, there's absolutely nothing there that I could have got involved in. So we disregard that. So the next thing I look at is this. If we look at this low here, okay, ever so slightly, if you just analyze the small details, okay, this low ever so slightly near missed to this high. Okay, so what I'm anticipating appears to be what I forecasted last night, which is I'll be looking for price to come down, do something like that, and then do something like that to give us 3 sections, and then I'll be looking to get long. Okay, again, I wouldn't be interested in one of these really wide stop losses, you know, if I was going to get long on the break. So I'll be looking for the risk entry within the structure if we get something like that, and I've got an alert set just to see if we come back down to tag this low, which failed to retest the back end of that. And if we get that, then I'll be able to manage it up to the start of this structure for something in the region of 3%, and then I will be targeting this high here, or these highs, given that there's 2 of them, for something in the region of 12%. And one of the reasons is because if we measure the range, so the higher time frame liquidity point, which we broke below and retraced back above, we measured there, the 90% area falls exactly where that where my target is. Okay, which is often where price pulls back deeply, even if it's going to continue in the forecasted direction. So that is euro dollar. You can sort of see now price starting to pull back to that sharp area of volume there. Okay, we shall see what happens. And that would make contextual sense. That would be a healthy correction relative to the move up which has preceded it. So pound dollar, I'm actually going short, and you might be thinking, well, surely that will be going long. Well, I'm kind of looking at this and how prices responded, and I'm kind of seeing this as potential pound weakness rather than dollar strength or dollar weakness, if that makes sense. I think you get the point. So I'm more playing the pound in this instance. But what we have in this instance is we have all of this volume here. Okay, when price starts to drop out of that, it leaves a footprint. Before this massive move like that, where was the origin of this massive move? Well, it wasn't here because price was consolidating. The origin of this massive move started here. Okay, and that implies that there's a lot of volume there, as does the fact that we near miss to it. The near misses often give us a clue as to where the volume is. And we get another one here. So that's another clue, okay, that the volume is likely here or sat just above, given that this to the left is a higher time frame liquidity point. And sure enough, that's where the momentum starts to come in. You might be thinking, well, this is quite far in the run if you're looking to get short, but the probability, if we're down here, if we've broken below here and we're consolidating underneath, the probability of this not following through to the downside to take out at least this low, which this low near miss 2, becomes very high. Okay, so price at this moment in time appears to have not found enough liquidity here to move it to the upside. So I'm just seeing this as an impulse correction continuation to take out this low, potentially go down to here, but I'm not concerned about that at the minute. So as we drill down, this is not long price action. So this is one of the reasons I'm looking to get short on this. Is one, if we're going long, we've responded from nothing to the left, okay? And also, this is not typically how we move up. We don't typically move up like that, retrace like 80% of the move or 70%, and then just start going long like that, okay? So what this is telling me is that this is a potential short move. And if we just zoom in, is there any reason for that? Well, if we look here, okay, so we just analyze these structures. We have this correction, we drop out, we then form this, okay, with the middle section there, okay. All these highs are now also, just to touch on it, these highs are, if we just zoom out, they're all above this low as well. So I'm not concerned about, these are not necessarily relevant anymore, these highs. And in any case, they're completed structures anyway. But what is potentially relevant is this high here, this little consolidation here. Now, why is that relevant? Well, the reason it's relevant is because if you look here, we had this volume here. Okay, so we have this here. Notice that this is sharp for one. That implies that there might be volume there. We also narrowly missed, as with euro dollar on the flip side, this near missed this low here. And the other clue that there might be volume there is that we had a near miss to this area of value, okay? And that this might be potentially the 1, 2, 3, which gives us that kind of structure, okay? And then we potentially get short from there. So there's several reasons why price might gravitate towards this high, okay? The fact that it's near missed this low, the fact that this near missed to it, and the fact that it's sharp, okay? So what I'm going to be looking for in this instance, and we may also, just to touch on it, we may also be getting a 1, 2, 3 last leg into that area. And if that was to happen, the legs would be of a similar length. So when that happens and it lines up with an area of value, that also increases the probability of this playing out to the downside. Let's just get rid of these for a second. Whoops, didn't mean to do that last one. There we go. So what I'm going to be looking for is I'm looking for a tap into the area of value. I won't be looking for risk entries because we are quite far into the higher time frame run potentially, and this is where you can, if you take a risk entry here, you can be tagged in, tagged out, and you just get larger structures just because we're in an area where a lot of profit taking could take place. Okay, so what I'm going to be looking for is a tap into the area of value. If we tap into that and likely retest the back end this as well, and we retrace back below the area of interest, I'll be looking to get short with a 15-minute risk entry, just once again, just because of how far we are into the run. And then I'd look to get short on the break or within it. And then I would actually target this low because once again, because partly we are potentially far into the run, and because I can get my minimum take profit requirement of 5%. Okay, so that's where I would actually set a take profit at the 90% area, and that would give me something in the region of about 5%, 5.5% to work with. So that is pound dollar. We shall see if we get that. This could take a little bit longer. This may even, this may form a deeper correction. It may do something like that and then push up. Okay, we shall see. We don't need to know. Just need to be ready. And then Kiwi CAD. Okay, my internet is frozen. Just bear with me, folks, while this internet sorts itself out. Is it going to sort itself out? Answers on a postcard. There we go. Right. So Kiwi CAD doing exactly what I anticipated yesterday. As I said, we don't know what's going to happen next, but we can hazard a guess once we understand price action to a high degree. So we have this consolidation here. Okay. This reminds me of what was it, pound dollar. We've got a similar sort of thing going on as we had here. So we had all of this consolidation, and then price leaves a footprint, and that was where the big move started. We have something similar on Kiwi CAD because we have all of this consolidation, and then this liquidity point was where this big move started. So that implies that that's where the volume is. And sure enough, we near missed to it. That also implies where the volume is, especially when we get to that area in the form of a reversal structure. And sure enough, that's where the momentum to the downside kicks in. So as with pound dollar, I'm kind of, bear with me a sec. As with pound dollar, I'm kind of seeing this. What is going on? Let's get rid of this off the chart. I'm kind of seeing this as an impulse correction continuation to push lower because we're consolidating below this low, implying that price did not find enough liquidity there to send it to the upside, and it doesn't really have any logical reason to at this moment in time. So I'm just looking to capitalize on this move to the downside down to that area there. Okay, and we actually have a near miss to that as well, which I just spotted on the fly. So if we just zoom in, you can see that we have this this bullish candle yesterday, but it wicks through the area of value, and I should show you as we drill down. So yesterday I was saying, if you remember, okay, we don't even need to zoom to the 1 hour chart to look at this. So I'm not concerned about all of this at this moment in time because, as I said yesterday, these highs are both above here. Okay, so they're not necessarily relevant anymore. Okay, so I thought we may be retesting the back end of that previous low, that higher time frame low. We also had the area of value here. The clue that this was the area of value was because we near missed to it, and the fact that, and we also had the other reason why price would likely gravitate back towards there is because this area of value narrowly failed to retest the back end of all of this, where there was a lot of volume. Okay, what happens? And I said that we'd likely tap into that area of value that we near missed to, and potentially retest the back end of all of this, and then we'd see the aggression to the downside, and that's exactly what's happened. Okay, there was no way for me personally to capitalize on a move to the downside from that area. Yes, you had that washout candle, but this is massively higher risk just because we've come from an impulse up and because we also have the gaps here as well. So I wouldn't be interested in a risk entry there. I know some people caught that. Well done to you, to those of you that did, but I'm only interested in sticking to my rules. And what I'm looking for here, so this just looks, if we just zoom out to the 4 hour a second, this looks a bit undeveloped to me at the minute. So what I'm looking for is I'm looking for a structure like this. Okay, so yes, you can have these kind of steeper flags, but they tend to happen sort of higher up into a higher time frame run if they're going to commit to the downside. When you're further down, it's important to remember how far into the move we are. When you're further down, you really want to be looking for the flatter corrections. Otherwise, you get short on the break of structures like that. Okay, and then you end up being tagged in, tagged out, and then price does something like that. Then you get the flatter structure, and then it commits to itself. Okay, so that's precisely why if this structure, if this little flag was high up into a higher time frame run, I would already be in this position most likely, okay? But because it's not, I'm looking for a more developed structure. Okay, so what I'm going to do here on the fly is I'm going to set a little alert here. Okay, and the reason I'm doing this is to see if price comes down to give us a bit more of a base before pushing up. And if it does, that is when I will look to get short with the risk entry within the structure. Okay, so if I was to look to get short on the break of a structure like this, then I would only have like 1.5% to work with to the lows, which is fine on these smaller structures. But on a larger structure like that, you've not really got much room to lock in any profit. And obviously, the idea of trading is to make money. So, if we did get something like this, and price responded from the low, and we got something more developed, okay, I wouldn't really have any room to lock in profit. Whereas if you get short with a risk entry within the structure, then even if that was to occur, then down to the lows, you've got about 4.8, 4.9. Okay, that's with a 10 pip stop loss. I can't quite get my minimum requirements of 5% to the low. So I wouldn't necessarily, especially as we might not get a 10 pip stop, it might be slightly larger. I wouldn't be setting a take profit at the low. I'd be targeting that higher time frame low there. Okay. And that's what I'm going to be looking for, folks. We shall see if this develops, but the market doing pretty much what we've been anticipating across the board, but that doesn't always mean that you are able to get in. And I think that's where a lot of people are good at picking the direction, which only took me to do it to a fairly high degree. Only took me about a month or two of trading this way. But timing your entry and getting the entry is something which, in my experience, has taken and takes a lot longer. But anyway, that's what I'm going to be looking for, folks. I hope you've enjoyed this video, and I will see you again in the next one, which will very likely be made tomorrow. Enjoy the rest of your day.